Hello. Hey, Jeff. How are you? hello, everybody. I'm a little bit late. How were the holidays? Oh my gosh. It has been a minute or two since we have done client reviews. I've had clients and I've been working. Um, but the holidays gave me some evenings off, so that was good. Stop in, say hello, please. Please say hi so I know who's here. Otherwise, I can't see it. I don't know how to do that. I suppose I could figure it out. Hey, Dave. How's the cattle business? Hi, Brooklyn, again. You're always here. I love it. Mike, hello. Okay, I'm gonna start with some pretty big. I got some big stuff that happened this week, and so or happened last week or the week before. I guess it's the 7th already. Hey, Bruce. Not fighting fires tonight. Hello, Heidi. Hi, Chandy. Sloppy and wet. Ugh. Not here. It's nice. It's not snowing. Well, you know what? We're supposed to get freezing rain tonight. Okay, so in the last month, I suppose it's been, we have gotten rid of Wealth Without the Bank or Wall Street. So for those of you that, last time, hey, Crystal, last time I was live, some lovely lady didn't even know who I was. So, all of you saying hi know who I am. But if you're watching and you don't know who I am the author of the book Farming Without the Bank. I am Mary Jo. And so I do a weekly meeting or a weekly review of clients and just share with you what I talked about with clients, how we found some money so they can get started farming without the bank, all that good stuff. If you don't want to hang out, that's great. Whatever. If you do want to hang out, or if you want to hang out, that's great. If you don't want to hang out, you can go to farmingwithoutthebank.com and grab the book. Okay. Enough of that. So, I had a huge sale on Wealth Without the Bank because some of you may not know I have stopped printing that book. I have retitled it, made it shorter and better, covered a couple different things in there that I didn't in the old book, and it went to print. The new book went to print. So I don't even have a book, but I'm so excited I want to tell you. It is Life Without the Bank for business owners who are frustrated and tired of the BS from the banks. So I am super excited. The first shipment of this new book will be here probably in a week. And then I am making sure that it's all printed good. And then we are going to be releasing it shortly so that everybody can get one. It is, for those of you that have Wealth Without the Bank, it is very similar to Wealth Without the Bank, but it is geared more towards business owners. If you want to purchase one and share it with somebody or just have all of my books, that's awesome and I appreciate that. But just so you know, I don't want to mislead anybody that it is an update of Wealth and a pretty major revision of that, but it is going to be similar. But nonetheless, exciting news. And so with that, I want to start my first. I get a lot of emails through the week, and I did a conference webinar. I spoke for a conference that had to go via Zoom. And I spoke there on Tuesday for the Lake Region Roundup in Devil's Lake, North Dakota. And we have had amazing feedback on that. So if you guys are in charge of some kind of a conference and you're looking for speakers, I would be happy to speak. And this year we've done a lot of virtual. So it seems to be working, and I was really surprised by the feedback. And they did say there were a lot of younger viewers than normal. Most attendees in person were going to be older, but whatever. The younger generation is paying attention, and you all know I love them. Okay, so I am going to read you verbatim an email that I got from a gentleman who wanted to do a for sale by owner with a neighbor guy. Okay, and I said, well, he called and we had a meeting, and I said, well, why don't you just do for sale by owner? Why don't you just owner finance him? You're either going to make the interest or the bank is going to make the interest. And so I said, why don't you just owner finance him? And this is the email I got. This is so good. I am going to read it verbatim because I do not want to mess this up. He said that he told the banker, I'm going to sell my land on a contract. Of course, he thought that was a bad idea. First he said, I will not allow it. I started to get rather angry, but calmed myself and told him, I will do with my land as I wish, since it is paid for free and clear. He reneged on his statement, but still said it was a bad idea. Here is the big statement he told me. The buyer should be paying the interest to the bank, not to you. Ding, ding, ding. Yes, that's exactly what he said. Exactly what I say, right? Why? Somebody's going to make interest. Why should the bank make it? And it's not often that I see this, you guys. That a banker is quite so blunt, but to say, I will not allow it, and there's no loan on the land? Was the banker so flustered? Did the banker not know what the client had on his books and what he had, what kind of relationship they had and what he had for loans? I mean, it's absolutely crazy to me that they think, some of them, not all of them, this is not often that I see this kind of control, right? It is actually fairly rare that I see a banker try to provoke this kind of control. Not your land. You don't have a loan on it. There's what? But I should make the interest. And I don't have in my notes, but the client, the guy then went, the gentleman that I met with then went on to say, I'm now sold on the concept. Because it all makes sense, right? The banks are in business to make money. They make money off of interest. It's the same thing that Nelson tells you to do. You need to be in two businesses. One that makes you cash flow, and two is the banking business. We all need to be in two businesses. I'm in two businesses, right? I'm the banker and I'm the infinite banking coach. I'm in two businesses. And so we just got to put that cap on. It is such a different thought process, but it works. It works. If it didn't work, they wouldn't be so scared. What would the banks do if everybody owner financed? I mean, it's not going to work in every situation. It's just not. There are times it's not going to work. But if it can be done, if you can do it and you are comfortable doing it, why would you not? Why let the bank make the interest you can make? If you can help a young farmer get started, why not do that? I love it. I love it. It was one of my favorite emails this week. Okay, let me see who I'm missing here. Hi, Enrique. Adam. Hi, Adam. Application started tomorrow. That must mean you're back in the States. Oh, look, Dave knows somebody. Enrique, that's when you drop that banker, right? Or we know. Yeah, that's a little questionable. Hello, Lynn. from Wisconsin. How is it going over there? I got to talk to your wonderful daughter the other day. Okay. First, I had a client that had, this was the second meeting that he had. The first meeting that he had was with another agent who told him everything that he needed to know. He scheduled an appointment with me. I didn't know he met with another agent. He scheduled another appointment with me, asked me a ton of questions, which is great. That's what the meeting is for. And he kept asking about rates of return, asking about trying to compare it to an investment. And then he made the comment that he said, well, I just want to put a small amount in and then I want to be done. And I said, well, why do you want to stop funding it? What do you mean? He's like, well, I don't want to put money in forever. And I said, but why? Like, why would we stop putting money into the policy when the policy really starts to perform well? We want to stop putting money in. And I get this question all the time. When can I stop paying premium? And I said, well, why do you want, because of the questions prior, it wasn't just the typical, oh, can I stop putting money in? Okay, we're good. No, like he said in his head, he was thinking, I want to put X amount in and then I'm done. I don't want to put any more in because I'm going to retire and whatever. And I said, he goes, well, we want to start businesses. And I said, okay, so why not put the money in the policy and then borrow against it to start the business? Why not put the money in the policy, borrow against it to buy a farm? This is an and asset. Okay, so some of you may not have ever heard me say that before. This is an and asset. We can put our money here and we can borrow against it and farm and start businesses and buy real estate and do all of these things. It's not an or asset like the stock market where we're going to put money there or we're going to buy an apartment building or we're going to buy cattle or something, right? This is an and asset. And he said, well, I understand that. But what if I can get a better rate of return somewhere else? I said, well, then why wouldn't you put the money in the policy and borrow against it to put into the stock market? Oh, hadn't thought of that. And so he's like, well, why would I do this instead of putting it in a savings account? And so we go through that example. Well, if you put it in savings, you have to take it out of savings and to interrupt the growth of that money. You are not interrupting the growth of our money if it's in the life insurance policy. We're borrowing against it. And I said, I think that you might want to go back and reread Nelson's book. And he said, yeah, the first part of his book is fairly simple to me. And by this time, I am thinking, well, what? So I said, if it's so simple, then why are you asking me these questions that are covered in the first half of Nelson's book? And he's not alone in thinking that, right? Many people take the first half of my book and they just skip over it and they go right to the numbers. They take the first half of Nelson's book and they skip over it and they go right to the numbers. Because that's what they want to know. They want to know rates of return. They want to know what kind of dividend rate they're getting. They want to know all these rates. But we skipped over the first half of the book. Or we thought we knew everything because we read it so fast. And we have the arrival syndrome. No, read it again. I've read that book a bazillion times. And I learn something every single time. And so if you are questioning some of those things and you've not gotten Nelson's Becoming Your Own Banker book, then you can get that on Farming Without the Bank too. Reread it. I had a gentleman tell me a week ago that he bought this book on audio. Farming Without the Bank. I have this book on audio. He has listened to it 14 times. And he has listened to my podcast twice. He's a trucker. He has lots of time. 14 times. And he said every single time he listens to it, he hears something different. Don't assume that you are going to know everything and have the arrival syndrome after the first time. I had a couple of guys in this week that want it compared to a rate of return, compared to a 401k, compared to an IRA, compared to a Roth. And I think I actually had that question on the conference, or on the presentation that I did the other day. Well, Mary Jo, how does this compare to a Roth? Well, the only thing that is comparable is that it grows income tax free and can be used income tax free. It's liquid. A Roth is not liquid. You have to have it in there 5 years, or you have a penalty to get it out. A Roth is at risk because it's still in the stock market. A life insurance policy is not at risk. And so a life insurance policy is not an investment. And I have a podcast about that. It is not an investment. So don't think that this is going to be the answer to that if you're looking for an investment. This is a tool and a concept and a thought process around money. And if we're not getting it, and Nelson talks about this in his book, if you don't get it, go back and look and read it again. If you don't get it, then you might just have to walk away from it, right? I'm going to give you probably more than 2 chances. But at the end of the day, we are not comparing rates of return. If you ask me, Mary Jo, what's that guaranteed rate of return in the policy? I heard it today in a meeting. The clients I had called their other agent while I was on the phone. And the agent's like, oh, they're going to give you a 4% rate of return. That's total crap. 4% is part of the formula. But it's a formula. And it's a 4% gross rate. Okay, I didn't always know this. I have misspoke myself. But now that I know, it needs to be corrected, right? And in this industry, we blurt that number out like everybody's going to get it. You're not going to get a 4% rate of return when you're 65 years old. And so, who cares? It's not about the rate of return. It's about liquidity, control, and guarantees. That simple. Those 3 things. You can't find that in another product. And if you do, you let me know. So don't have the arrival syndrome. Nelson was not a simple man. His book is not simple. Read it slower and you will understand what he's saying if you have some of those questions. All right. Hey, Brandy. You're watching on TV? I'm on your TV? Look at there, you guys. I am a TV star. Hi, Tony. She needs a hobby. She told me her hobby, Lynn, she told me her hobby is firefighting. I told her that same thing. Hi, Doug. Hey, Samantha. There she is. Oh, I got the whole family. I love it. Okay. Another guy with, so many of you would understand, he tried to farm with his dad and his brother. That did not go well. Nobody could get along the way it sounds. So he sold everything, quit farming completely, and now the brother's not farming it because it doesn't sound like he can manage it on his own. And dad is 80. And so he's just, everything's being rented out. But because there will be absolutely no estate plan and nobody wants to talk about anything, and the 2 executors are the brothers that can't get along, and nobody has the backbone to change that or is not taking the time to change that. Huge mess. And he made a very hard decision, but the right decision, to just walk away and say, you know what, I'm not going to have part of this mess. And he was sinking a lot of money into a farm operation that was completely out of control for estate planning. And so it was, Jolene Brown talks about this a lot. And if you guys don't know who Jolene Brown is, just go to jolenebrown.com. And she is amazing and awesome and honest and blunt and German as well. And so I love Jolene because she just tells families what they need to hear. Why are you doing business with somebody, or why do you keep allowing a child to farm with you who is completely irresponsible? Or if we can't get along, why are we not correcting that in the estate plan? And so it was a really good conversation, and hopefully he can at some point buy his own land if things don't get straightened out. But he and his wife have really good jobs, and they are maxing out 401ks. So they're putting over $40,000 a year in investments so that they can have, darn it, I don't have my jars. So that they can have the tax deduction later. And I have a visual for this. In a 401k, I like to call it seed versus harvest. And so in a situation like this where they're making a decent amount of money and they're living very frugally, it's not like they have massive salaries by any stretch of the imagination. But they have made a commitment that they're only living off of one of those salaries and the other one is going into retirement plans. And so they're paying tax on the harvest. So think about it. If you're putting money into a 401k and we now have a choice. If we go to the seed dealer and he says, oh, do you want to pay tax now? Or do you want to wait until you have to harvest? Do you want to pay tax on the seed? Or do you want to pay tax on the harvest? We're going to say we want to pay tax on the seed, right? Because one kernel of corn turns into many. And so what we're doing in a 401k is we're saying we're going to pay tax on the harvest, but we're not going to take that. We want that tax break today on the seed. Well, anybody that I have that is 55, 60, 65, 70 that has had off the farm jobs, guess what? They're in tax trouble because they want to quit farming because they want to retire. So they don't have all these deductions, or they have a pension along with a 401k coming to them. And now they have too much money coming in and not enough deductions, and they're paying all their tax on the harvest. Why are we taking this deduction today if we should be taking it later? Which is why a lot of people max out their Roth IRAs. But in this situation, this couple said, I want passive income. I want something to come to me at retirement every single year to help me pay for retirement. And I said, well, if you want to buy farm ground and you want to buy rental properties, what good is that $40,000 a year going into a 401k? Would you rather not have liquidity of that money so that you can buy the farm ground, you can buy equipment? Otherwise, you're going to have to go to the bank and borrow it, or you're just going to have to give up the opportunity. Because again, it's an or asset, right? You put your money there, or you get to buy farm ground or apartments or whatever it is that you want to buy. And so she was like, well, really, what is the benefit? And I'm like, liquidity, control, guarantees, right? The same three things I just talked about. And as we went through the numbers and long term, because they're, 46, so 38 and 46. So when we go through the numbers long term of what they have for cash value and what they've put in, He's like, well, that's a pretty good return. And I said, and don't forget the 50 years that you got access to all that money to do things outside of the policy. So it is just, and it's not that they didn't understand. It's so hard to change that thought process. Even like the first gentleman I talked about, that the bank convinced him that this was a good thing because of the fact that the bank said outright, I want to make the interest, not you. And huge. Sometimes we just can't get our head around it. And as my client Nate says, it's really simple when you quit making it so hard. It's just that simple. And we try to make it so complicated. It doesn't need to be that complicated. It doesn't need to be. All right. Then I had another a family. All 3 children, 1 in-law, the 1 daughter tuned in from another state. It was awesome because the daughter does the bookkeeping, the boys do the farming. It was a great meeting, but they all were on the same page. They all knew what was happening. They all knew what was happening with the estate plan. And so unlike the guy that I just talked about, no idea what's happening with the estate plan. Everybody's too scared to talk about it. This couple, everybody's in the meeting. They're joking back and forth, right? And she knows exactly how much money that they're making. She was even joking about being left out of the estate plan because the farm is in a corporation and the boys got shares of that corporation. She knew that was going to happen. And guess what? Everybody's okay with it. Mom and dad get to set up that position of what's going to happen. And if we have a child that feels entitled, well then let's deal with them now rather than let the siblings deal with them later. But it was absolutely awesome. Dad has probably one of the worst variable life insurance policies I've ever seen. He's got a lot of cash value in there, but it is eating itself up bad. The insurance company that issued it no longer even services them. He can't even get an in-force illustration, which is the projection of what's going to happen. They won't even run that anymore. I mean, absolutely ridiculous. And most likely uninsurable. So now we have to hopefully get him insured or figure out what we're going to do. They had an opportunity to move the policy and the window expired. So hopefully we can figure it out. But again, I have ranted and ranted about variable, universal, indexed, all this crappy life insurance. And unfortunately, he got some. So now we have to decide what we're going to do with that and work through that. They have a family friend that's a life insurance agent, and he said, as the one family member who set up the meeting snuck to the corner, he said, well, we did call another agent. I said, is that why you put yourself in the corner? So it was a fun meeting, super, super fun meeting. Another gentleman that dad passed away, and he is taking over he's the only one farming. However, he is renting the ground from mom so that mom can live, and there's still land debt that dad had on the ground. So mom and dad still have land debt. He's paying that off. So mom is not that old. She's only in her 70s. His land rent, we figured it out. His land rent, if mom lives another 20 years, which she very easily could, he will have bought that land twice with land rent. This is another thing that gets me a little bit, and I understand why it happens. Mom and dad need money to live. They don't want to sell the land because of capital gains. I get it. I 100% understand. But we also need to understand that if we're going to pay land rent, then you pass away and we have to buy the siblings out, we have essentially purchased it twice. Is there a better way? This particular gentleman agrees with that, right? Like, I would love to have a land payment rather than land rent. How about we just make the purchase now, or we deduct it? Like, if I'm going to pay you land rent, can that come off the purchase price of what I owe the siblings? Because now I'm giving mom the money. If she needs it to live, fine. In some cases, mom or dad don't need it to live. So could they put it in a policy? The land rent, could that go into a policy so that that death benefit goes to the next generation, off the farm kids, the kid buying the farm, whatever. I mean, there's a million strategies there. But can we figure out a better way to do that rather than having to buy it from the bank and buy it from mom and dad through rent? Can we make that some sort of a deduction? What was awesome is that he has a 19-year-old son, and he was in the meeting. And all of these numbers were being talked about. Just like the prior clients, who the entire family, even the non-farm sibling, was in the meeting, and everything was freely talked about. Their estate plan is going to be very clear. Very, very clear. Because it's all being talked about. There's no secrets. Why not have that open book? Like, it just, every time I see it, it works. Everybody knows what page they're on, right? And I'll know in years to come if it continues to work when somebody passes away. But it's going to be very clear that this is what you're getting because we're talking about it. The 19-year-old understands the farm finances. He understands the numbers. He sat there and listened to the strategies of how does dad get some of this stuff paid off. The bank is, like the first guy I talked about tonight, the bank is super controlling in this situation. And he only has like 4 loans. And they got mad because he didn't tell them about a $4,000 a year payment that he was making. And he hasn't been farming that long, but dad was very controlled by this bank too. And I see this happen a lot, that the kid is being reprimanded for dad's behavior or dad's mismanagement, if that is the case. But this guy in particular said, well, I'm scared to go to another bank because he always finds out what I'm doing, even if I don't tell him, because I don't believe he needs to know everything. Like, why does he need to know if I'm going to go on a vacation, right? Like, I mean, I get that if they're borrowing living expenses, I get that to an extent. So I said, if he's bullied your dad and now they're bullying you, why do you still go there? Like, I don't care. Maybe if you go to a different bank and they actually find out you're looking and you've had an opportunity to switch banks, that might change their tune. Remember, banks are there's a two-way street there. They need you as much as you need them. If you are making your payments on time and you are a good customer, they're not going to want to lose you because they make money off your interest. So don't let them just whip you like a puppy and stand there and take it. If you are not paying your bills, then you need to be reprimanded, right? Like, you have to make your payments. They are in business. They don't want your equipment. They don't want your land per se. They want cash flow. But if you are a good customer and they are trying to tell you what you can and can't do and make it difficult for you, go someplace else. What does it matter? I had a young guy, I had a small operation this week that they said, well, the bank won't give me any money. And I said, well, that's good. People always look at me like I'm crazy when I say that. I'm like, that's good, because it forces you to do something different and figure out how you're going to get the money besides just marching into the bank and saying, I need money. And then letting them just call and tell you what you need. Because this particular, I almost forgot this. This particular guy who's being super controlled didn't sleep for 2 weeks because he didn't know if he was going to get money. The bank was mad at him because he bought a mower conditioner or something. And so he sold that particular piece of equipment and said, I'm just going to let the neighbors do it and just pay it to have it done. And then the bank calls and says, oh, you're good. We're going to give you all your loans. And if you want to buy another conditioner, you can. After you just raised hell, I said, don't you dare take any money from them. That is the problem, is when then all of a sudden the numbers look good because beans went up, right? Soybeans went up. So now he's going to be able to sell his beans for more and everything's going to look good for, 6 months. And then it could go backwards and then you're in this cycle. It's insane. It's like having a relationship with somebody that's bipolar. Like, we don't know when the ups and downs are. These bankers are like, we don't know when the commodity prices are good, they're happy. When they're low, they're not. And then they're mad at you for taking the money they offered you. Think about it. You guys write that check. Don't be taking money if you can't pay for it. And don't look out 12 months. Look out long term. Okay. Samantha. Hey, Sarah. Nelson's book is Becoming Your Own Banker. If you go to farmingwithoutthebank.com, you can get both of them as a bundle. If you have already gotten mine, you can just get Nelson's there. Let me check these before I get too many. Yes, you do, Brandy, unless we would have done a term that we can convert to whole life, you will have to go through the application process to start another policy. That's a really good question. A lot of people, thank you, Bruce, for letting Sarah know that. A lot of people ask that question. After I start one policy and I've gone through the application process, do I have to do it again for every other policy? Yes, you do. Unless you buy convertible term that we convert to another policy, yes, you do. And sometimes I'll do convertible term because somebody is terrified of needles or something, and we're not gonna get them to do another health exam. Then I might do some convertible term, or if we need more death benefit, but it's not something I do for everybody. So, yeah, you would have to. Oh, thank you, Sarah, for asking. And thank you for being here the first time. All right. Oh, this was another great success that I had this week, is I talked to a gentleman that was a Dave Ramsey fan. And I'm going to say was because he said, well, I'm going to confess. I wasn't going to confess. It's always funny how everybody confesses by the end of the meeting. Everything, like, I've called agents, I listened to Dave Ramsey, like, all the dirt comes out by the end of the meeting. And so this guy was a Dave Ramsey fan. And his wife got him Farming Without the Bank 2 years ago. He said he opened it up, he read a couple pages and said, this is not what we do. And he shut the book and put it away. 2 years ago, some massive changes, meaning quadruplet babies. And so he's like, whoa, we need to do something different. So he picked the book up, read it again just recently, and said, oh my gosh, this is most likely going to be the answer. And so him and I both agree, and I will always agree, that Dave Ramsey does a phenomenal job getting people on budget. And I know when people are actually following Dave's program because they don't have any debt. Just like this guy, he has basically no debt. He's working full-time off the farm. His wife is working full-time off the farm. They have been super smart about their money and what they're doing. And so it's just a matter of getting him started. But he said what every other farmer I have says that were Dave Ramsey fans. Dave is great, but he doesn't understand farming. And I would go one further and say Dave is great, but he doesn't teach you how to create cash flow. He teaches you how to be debt-free. Even if I was a business owner, and maybe there's some stuff of Dave's on the business side that I'm missing. But even if I'm a business owner, how do I grow wealth? How do I get some passive income coming in? And so that kind of stuff is not being talked about. And those are important things. How is this particular gentleman is farming with dad and a neighbor? And the neighbor guy walks in the kitchen one day and says, I'm done. I'm retiring today. I will sell you the equipment. I will give you a deal. You can pay me as long as you want. And I will also have a few hundred acres to sell you. And I will be happy to do a contract for deed on that. And so they're still working out the finer details. But how wonderful to have a neighbor who really wants to help another young guy get started. But he also has to prepare that dad also now has said, I probably want to retire at 70 myself. So you got 5 years to figure it out, young man. And so he's going to have a lot of equipment to buy. He's going to have to figure out where this money is going to come from. He doesn't have any money in a 401k or an IRA because he has 6 kids under 7. And so how am I supposed to save and put money into anything when he was investing in diapers? I think is what his comment was. And he's right. So that, to me, that was awesome. And I said, I had mentioned something recently Dave had said, and he said, I don't know, I deleted his podcast after I read your book. Success! Right. Success that he deleted the podcast, yes. But success that he saw the value of what IBC is, right? And they don't spend money frivolously. They watch their pennies. They are managing their money very well for having little kids, a lot of little kids in diapers, formula, right? Like he said, the thing that scares me the most is watching them eat. He's like, the amount of food they can put away, I might go broke just feeding them. And so those things, like, where is Dave in those situations, right? Cash flow is what we need. Cash flow is king. All right. I had another parent that wanted to have her 16-year-old start a policy. And I said, he can't start a policy unless you have death benefit. She's a single mom. And she said, well, I don't want any life insurance. And I said, okay, then by law, he can't have any. So if you are wanting to insure your child and your child is a minor under 18, the child can only have half the amount of death benefit that you have as a parent. If you are a grandparent that wants to start a policy on your grandchild, the parents need to have death benefit. That stinks. Because if these kids aren't listening to you and you just want to help that grandchild, there's no way to do it unless mom and dad have life insurance. I have several clients in that situation, and we just can't get the grandkids insured. So something to know. Had another client this week that a new marriage, and she grew up in an environment where there was no debt. He obviously grew up in an environment where you just always have loans, no big deal. And she had a really good job, and she had a lot of money saved. And so we ended up talking a lot about being an honest banker and paying yourself back. Well, it came out in the wash that she has lent him money. And even though you're married, and I understand it's all your money, if you have to think about the fact that you need to pay your wife back because she is now the banker, you better pay your wife back because she is now the banker. So when he listed loans, he did not tell me that he had a loan with her. And I said, you can't leave that out. You need to make sure you put that on the books. I said, you're overpaying on certain debts, but you're not paying her back. And she's harping on you to pay her back. So make sure that you treat her like a bank and don't put her last, because then essentially you're putting yourself last. And that relationship, even though that marriage is new, it ultimately doesn't matter. And I see this a lot, that the wife is typically stressed out about these bills because she does not understand what they're for. She maybe doesn't see the books, the ins and outs, because that's not being shared. If your wife is stressed, and I can see it in a meeting, like I could see the stress or the tension, you've got to try to understand where the other person is coming from. You have to use more words and let them know this is what's coming in. This is when things are going out. Involve them. If they don't want to be involved, then that's a whole different situation. But men, don't ignore the fact that, and I'm going to call men out on this because it's rare that I see a man stressed about this, because he's usually the one out there doing the work and knowing that I'm going to have the money coming in. But men, pay attention. Open your eyes. When your wife is crabby, when your wife is stressed out, or when she's silent, you should probably consider asking some questions like, do I need to explain that further? Right? Put it on paper. I had a gentleman about a year ago who, his wife was almost in tears in the meeting. And he is sitting there very nonchalant, like it's all going to be okay. And I said, have you ever put those numbers down on paper for her? Like, you just gave me all these numbers. Have you ever told her those numbers? Well, no. Well, she didn't grow up on a farm. You just started this farming thing. How do you think she's supposed to know that? She doesn't know when things are sold and what's being bought and what kind of profit's going to be made. All she sees is money going into the farm and nothing coming out, and no vacations and no eating out. Eating out to this particular couple was going to Costco for a piece of pizza. Like serious budget. And you're wondering why she's stressed. Dudes, pay attention. Right? As women, we don't want to be stressed. We don't want to be crabby. That's not our goal in life. But if we don't know what's going on the other side, we have to pay attention. Women, if you want to be stressed and not know what's going on the other side, you're asking for your own trouble. Like, you cannot disconnect yourself from it and then say, well, explain it to me. No, you have to try to understand it. This is a two-way street. And I am not a licensed marriage counselor, okay? Let's just get that out right now. I am not a licensed marriage counselor, but I can read people's faces pretty well. So please, you guys, you need to work together. Okay, I'm going to read what's going on here, and then I have just 2 left. So if you guys have questions, fire away. I am your spirit animal. I don't know what animal that would be, but hey, Holly. Oh my gosh, Holly, oh, hi, Holly's dad. I was talking to a lady in Washington the other day that was just starting to sell real estate. And I was hoping that you have your podcast going. Let me know when you do so I can refer people. Okay. I talked to a gentleman last week that he's starting an in-home care facility for elderly. And it's those homes, like I'm kind of new to this concept because we don't have any here that I'm aware of. But it's when you take a house and you put 10 people in it instead of a big, huge facility. It's just 10 people sharing a house with, it's just a smaller care facility, and they're a huge thing. And I get super excited about them. But he is starting those. And so that's exciting. He was not farming. So the moral of this story is I don't just work with farmers. A lot of people think, oh, I just work with farmers. No, you can be a business owner. I had another business owner this week with a business that was over $10 million a year. And he is amazing. It's amazing to hear what he's done with his business. And he has a little bit of farming, wants to slow down a little bit, do some farming. But most of what he has, he operates in cash, obviously. And he just has a lot of cash sitting around because he's very profitable. Has 100 employees. And it's awesome to hear from big businesses like that. Big, small businesses, because he's just a heating and air company. But it's awesome to hear from those businesses because of the fact that they are typically the people that don't want to put their money in the market. And he doesn't believe in the market. He doesn't feel that it's good. And his accountants and nobody could tell him where to put his money. And so we just had a really quick meeting. And hopefully he will feel that this is right. And that this is a good place to put money. And he's got some real estate and all that good stuff too. So not just for farmers. Farmers need to understand that you're business owners, right? And so most farmers that I talk to are either plumbers, electrician, linemen, construction workers, truckers. You've got another business on the side. The farm needs to run just like that business. You need to keep your books. You need to understand your numbers. If you don't, how are you going to run the business? You don't run your other business like you do this one. And so that is a lot of why I wrote The Life Without the Bank and why that book is going to be coming soon. For those of you that were not here at the beginning, I have retitled Wealth Without the Bank, my second book, and wrote Life Without the Bank for business owners. So that one is being printed as we speak, and hopefully I will have that soon for everybody. However, business owners, and I experienced this when we bought our property, the amount of stupid questions I had from, it was not the banker. I mean, the banker had to ask them, but really it was Fannie Mae. The amount of stupid questions that they had because I was self-employed was annoying, super, super annoying. And so it was just timing that I had just finished rewriting this book, Life Without the Bank, and was struggling with a subtitle. And man alive, I swear to God that the annoying questions were so I could find a subtitle to this book. Because business owners and farmers, anybody that's self-employed has a really hard time with the banks. I might not farm, but it doesn't matter. It was just as much of a struggle for them to understand how I make money as it was for the bank to understand how farmers make money. So, anyway, that book will be coming soon. As great as you are, gotta feed kids. I will catch you on your podcast. Thanks, Bruce. Oh, Holly's dad. This is so fun. I have families on tonight. I love it. Okay, if you guys don't have questions, look at me. I've got this down to a science to be at an hour. If you guys do not have questions for me, please go to farmingwithoutthebank.com and you can grab Farming Without the Bank. This is also in audio. You guys, this is, apparently not everybody knows this because I don't share this all the time. But this book is, look at how tiny it is. It's not focusing, is it? It's only 99 pages. It's like the thinnest little book ever. It's a 2-hour read. The audio is only 2 hours. And so somebody thought the other day that he asked me if it was super fine print. Super fine print. No, it's not. It's like it's normal size print. 2 hours. You can listen to it. Don't forget that there's the podcast, Farming Without the Bank podcast. Many people have told me that podcast provides more information than the book, which is the intent, right? I can't cover everything in the book. If I did, it would be 9,000 pages. And so I'm saving you some time. Listen to the podcast, listen to the book, get Nelson's book, read it, and reread it. Same thing with mine. You are going to have a lot of questions answered. And then schedule your appointment so that we can visit and I can help. I am happy to help. I had another client this week that said that he read my book and he went to his local agent and his local agent said, "Oh, I know what she's doing. I've read her book." He had basically $100 of cash value after he put in a couple thousand. And I said, no, he doesn't know what I'm doing. I call BS on that. Because if he knew what he was doing, you would have more cash value. So just because an agent says, yes, I've seen her book. Yes, I've heard of the concept. Yes, we can do this. We can't. Even a gentleman asked me today, well, this is who I have my policy with. And they have a paid up additions writer. Okay, here is something that you all need to know. If you have a policy with a mutual company that pays dividends, okay, State Farm, Northwest Mutual, Mass Mutual, Guardian, Ohio National, Penn, Lafayette Life, One America, New York Life, all those companies are mutual, okay? I named off or Farm Bureau, Knights of Columbus, okay? I named off a whole ton of companies right there that cannot do this because they don't have a paid up additions rider. Their dividends go to buy paid up insurance, but that is not a rider that allows us to put more money into the policy like Nelson is talking about in his policy, or in his book, I'm sorry. So even though you it might show on your statement that you've paid up additions, it's probably just because you're getting a dividend that's going there. But these particular other companies can't offer it. And he had a good question for me today. He goes, well, how do you know that? Like, what? You think you know everything, Mary Jo? And I know that because I'm constantly hearing about these other companies. I have an agent. I know an agent that sells for Southern Farm Bureau. I know an agent that sells for Farm Bureau. I know an agent that sells for Knights of Columbus. I know an agent that sells for all those companies, right? Because at some point in time, they've reached out to me. And so I can just reach back out and say, hey, do you have this or this or this? And I can ask questions. And so it's really nice that I do have some connections along the way. And today was super nice because I have a connection with the company that has that horrible variable policy. And so I was able to ask that person and get some answers for them that they were not able to get themselves, or just to verify what they were being told was correct, which was absolutely asinine because it was stupid, but whatever. Not my thing. Not my company. So just because another agent says that they can do it does not really mean they can do it. I heard the other day that I am booked out until the beginning of February. So as soon as you get your book, you are going to get an email that has a link to my calendar. Go and schedule your appointment. If you need to reschedule it, you can do that. But get on the schedule. You will have a month to read the book, and it takes 2 hours. So go ahead. When you get the book, you're going to get a link. Get on the schedule right away. I have been booked out 4 weeks for over a year. So it's probably not going to get any slower. And I am super thankful to all of you for waiting. Super, super thankful, because I love my meetings with my clients. Absolutely love them. I love to hear about what you guys are doing. love to run the strategies. So I appreciate the fact that you are waiting for me, but I'm giving you a heads up. You're going to have to wait, and I'm sorry I have not cloned myself. But you're going to have to wait. So go get on there as soon as you can. Grab the book now and get on the calendar and read it. I had a guy today that said he just finished reading it like 5 minutes before our meeting. So it was all fresh. I don't care how you do it. It doesn't matter to me. Okay. I really am going to get off of here. When you borrow in separate loans, do you have to pay first on one or first payment? Oh, that's a really good question, Holly. So Holly just asked, if you have separate loans, do you have to pay on one before the other? The life insurance company doesn't keep them separate. Okay, so we have to remember that the life insurance company is not in the business of banking. They are in the business of life insurance. We are using them as a bank. And so to them, it's one pool of money. If you have $20,000 and you borrow 15 and 5, to them, it's $20,000. You need to keep it in the books, on your side, as two different loans if you're going to amortize and pay them separately. But when you pay it back, it just goes back into that one pool of 20, and then that gets released from there. But they don't keep, what they will keep separate is the amount of interest that's due for that policy year. But they will not keep track of the particular loan and the payback of it, other than the interest for that first policy year. Okay, guys, thank you for tuning in. Goodbye, Holly's dad, and Sam. I'm picking on some of my people. Okay, you guys, let me know if you need anything, Mary Jo at Without the Bank, and I am happy to answer those. Otherwise, I will see you next Thursday. Have a good one.